US stock markets snapped their two-week winning streak on Monday, switching to a risk-on approach ahead of the highly anticipated FOMC meeting, which is to play a vital role in the future outlook of the equities sector. Furthermore, Fed Chair Powell's speech after the decision is expected to attract the undivided attention of the market, possibly hinting when will there be a slowdown of the pace of its aggressive monetary policy stance. In this report, we aim to present the recent fundamental and economic news releases that impacted the US stock markets, look ahead at the upcoming events that could affect their performance, and conclude with a technical analysis. The Federal Reserve is expected to raise its Fed funds target rate by 75 basis points later today, marking its fourth consecutive meeting hiking with the jumbo rate, in an attempt to curb persistently elevated inflationary pressures within the US economy, which chip away the purchasing power of US consumers. The resilience of the US economy indicated by tight labor market conditions, alongside the resurgence of the growth indicator from contraction territory in the third quarter, practically allows the Fed to continue pursuing its aggressive monetary policy tightening practices, while also validates its hawkish outlook and plan, attaining the red-hot 40-year high levels of inflation, obstructing it from becoming deeply entrenched within the US economy. Today's decision will move the funds rate further into restrictive territory, which could cripple the economy and tip it into recession, a concern shared amongst market participants that tends to spark debates as to when will the Fed hit the brakes. Similar concerns were expressed during the last meeting. However, a chorus of FOMC members quickly dismissed the idea for a premature pivot, reiterating that such a scenario would be considered in a light of data indicating that inflation has indeed came down. That has not been the case, and the markets seem to have virtually priced in today's decision indicated by the FFF, which currently implies a 98.5% probability for the Fed delivering a 75 basis point rate hike today. Hence, the markets look ahead past the decision, trying to assess whether the pivot or at least a slowdown of the pace will come at the next meeting in December. However, some economists see the terminal rate rising closer to 5%, rather than 4.5% initially proposed via the dot plot graph released in the September meeting. Shining some light of the clarity on the matter could be the comments of Fed Chair Powell, who steps on the podium post the decision. Should the head of the central bank deliver another unwavering hawkish rhetoric, we may see the dollar gain support and US stock markets coming under pressure. On the flip side, should the chairman's comments contain dovish connotation, we may see the equities sector gain ground. All things considered, the aftermath of today's decision is expected to be heavily relied on the forward guidance and the press release rather than the actual decision, given of course that the decision is delivered as expected. Late last Thursday, the Twitter deal was finalized and setting an end to a 6-month-long fiasco where Tesla CEO Elon Musk was trading punches back and forth with Twitter litigators in regards to the terms of the acquisition and the percentage of spam bots present within the social media platform. Following the completion of the $44 billion deal, rumors surfaced that Musk intended the layoff as much as 75% of Twitter's staff, which were later confirmed by the dissolution of Twitter's board of directors and firings of CEO Agarwal, Chief Financial Officer Segal, and Head of Legal Gade, alongside other top-tier officials of the social media giant. The world's richest man is reportedly to take the helm of Twitter, and earlier today he changed his social media bio to Chief Tweet, jokingly broadcasting his self-appointment as CEO. When it comes to aspiration of the takeover, Musk reached out to Twitter advertisers with a short open letter, stating his intents to overhaul the media platform, emphasizing on the importance of moderated, nonetheless free speech by creating a virtual space where beliefs can be debated in a healthy manner without resorting to violence. He also addressed concerns by marketers in regards to his pledge for content moderation by sitting in the relentless pursuit of clicks. Much of traditional media has fueled and catered to these polarized extremes as they believe that this is what brings in the money, but in doing so, the opportunity for dialogue is lost, essentially openly calling for better and targeting that suits users' needs best, minimizing deliberate spamming practices. Lastly, as the acquisition was completed, Twitter was delisted from NYSE this past Friday with the closing price of $54.20 per share, and the payout settlements will take place within this week. It has been a fun ride, Twitter. Thanks for the memories.